The United States Central Bank has been printing gigantic amounts of money, and the central government has been spending huge amounts of money. So all this money's got to go somewhere. It's going into the markets. The economies are getting better because the economy stopped. But they're still not anywhere near what they were before, and that's happening all over the world because we're going from zero to, I don't know how far we're going. So for a while, the economy in the U.S. is going to get better, and certainly the markets, as long as they print all this money. Well, when markets start going down, when bear markets start for whatever reason, people are very skeptical of companies that have a lot of debt, because as fear, as exuberance gives way to fear, people start worrying about will they survive or can they survive, or their earnings must go down because they have so much debt. And some companies start going bankrupt, the really bad ones, and it spreads. I mean, this is just a simple bear market now. I'm not making any of this up. It's happened hundreds of times in bear markets all over the world throughout history, and that's the way they work. Well, everybody should allocate their assets in what they themselves know. They shouldn't be listening to me or anybody else. They should only invest in what they know. I may have 100% invested in Russia, but if they can't even find Russia on a map, they shouldn't think about investing in Russia. I may have a lot of money in commodities, but if they don't know what commodities are, everybody should invest in what they know, should not listen to others, and then they will know how to get through any problems that develop. Well, Chinese wine companies recently, the virus caused bars to close, restaurants to close, people stop going out. That's starting to change. I can see it on the internet. I told you about Japanese ETFs. The Japanese market's down over 30% from its all-time high. U.S. is making all-time highs. So there's certainly still places that maybe there are opportunities. I mentioned Chinese wine stocks. I suspect that very few people watching this show know there are Chinese wine stocks, much less that they might go up. And I told you, the virus has closed restaurants and bars and everything else. So conceivably, these stocks will go up again when people start going out. As far as I can tell, they have good products, decent management, etc. I don't just invest in stocks. Bonds, I'm not short bonds right now, but commodities, currencies, lots of other opportunities. As I look around the world, bonds are a bubble. Many stocks are making all-time highs. Property in many countries is certainly in a bubble. The cheapest asset class I know are commodities. Now, sugar's down 80%. Silver's down 50% from its all-time high. This is not a bubble. As I look at asset classes, at the moment, commodities seem to be the cheapest. I'm buying more commodities as we speak. Oil is in the process of making a complicated bottom. Bottoms go up and down, and go sideways for a while, and then eventually they turn around and go up. Known reserves of oil continue to decline, except for fracking, but that fracking bubble has burst. Before, if you could spell fracking, they would give you money, but now that's over. You have to make money, and so we're beginning to see bottoms developing in energy because it takes a while, and because of the demand, which is down a lot, but we're making a bottom. With gold, I doubt very seriously if anybody's going to take gold as a currency anywhere, and maybe a few shops, but very, very few in the world. So you can define it as a currency if you want. It really doesn't matter to me. Gold is a commodity which has been around for centuries and will continue to be around for centuries, whether we like it or not. I'm an old peasant, and us old peasants know when things go wrong, we better have some gold. We better have some silver in our closet or under our bed, because it is the thing which will get us through when governments or currencies start having problems.